through. I don't really want to take that on a reversal just yet. And if Starbucks gets all the way down here to Haas, that would be the next level of bounce. But then the 5-minute 200 is going to be there, so we're going to be stuck between them. It's going to be about 40 cents. Yeah, we're going to have to let it get down there and see what it looks like. Have I seen Kodak? No, I have not seen Kodak. What is that, KOD? Eastman Kodak. What is it, EK? I don't know what the symbol is anymore. What is it? Pete, what's Kodak? Give me the symbol. KODK. Okay, some crazy gap up. I have no idea what that's about. I don't trade $2 stocks. But if it gaps up here, I'm definitely not trading. I have no idea why it gapped up. Don't really care, but no, that's not something I'm interested in. It's not very predictable price action, right? I'm looking for patterns that repeat. This is not a repeatable pattern. $2 stock gaps to $10. It's not interesting. You know what? I stick to stuff like this, hard drop into a whole number to 200, and look at that bounce. So I tell you, prior day's close, there it is, and still going. And still going. And still going. So there's 250, $2.50 bounce. Not bad. Do I hear $3? Come on, Bobs. All right, we're going to do this. Prior day's close. See that little 2-minute bar, how it retested prior day's close? Put the stop right underneath that. We're going to lock this down. Lock it down. All right, that Starbucks got to Haas. See it? And there's that same look, that down and through moment. And there's that little bounce. So if you tried it, put your break even in now. It's not as much room as I would normally like, because this 5-minute here is at 80. So it's about a 40-cent difference between the two. It's decent enough to try. I wish we had a little bit more room. So I didn't do it. If you did, put your break even in. But I didn't. I skipped that one. QCOM is working on the second attempt. First one got stopped out at break even. You see it right there. There's your, so shorted the low at 50, rallies back, you get knocked out at break even, then you get a 2-minute sell here off the narrow bar. Second entry takes you all the way down to 91. And it hits the 200 and holds, then you take profit on the bounce. If it breaks the 200, you can look for it to keep going. If it hits the 200 and bounces, you can do the whole number trade and reverse it long and look for continuation off the bounce to the upside. GP, yeah, thanks. They had an early 1-2 minute pop, and then they just not much follow through on them. So I don't know if I want to mess around with the banks yet. Look at that first bar. See it? 2 minutes, very exciting bar, and then it just kind of fizzled. The market's not helping us at all yet as far as breaking out and rallying. And the other banks did kind of the same thing. One initial little push, and I haven't seen much follow through on them. So I'm gonna stay off banks for the moment. Bob's trying to take us to $3, man. Come on, baby, hang in there. Hang in there. Hang in there. Well, we got $2 locked in on the back, so we're good there. Xilinx stuck underneath the 200 here, boys and girls. This potentially, and there's a little bit of a spread on this, so not going to be ideal for some of you, but if this can fail and take that out, it's a good looking narrow bar stuck under a 200. If it breaks that low, hourly 20, right, a lot of support right here that if it gives up, there's a decent drop underneath it. 2 minute trying to control it here. See that? Narrow bars. 8's catching up. 5 minute 8's a little far away though, right? We don't like to be far from our MA, so it's stuck under the 200. If we can get a little bit more consolidation and then a breakdown, we're good. If the reverse happens and it cannot hold it and it consolidates like this and then pops back up, and you look for the failed short and you want to flip it, you got to look where that 8 is. You need enough space in there to rally back against it. So just an early candidate to put on a watch. I don't think it's a trade just yet, but definitely worth looking at. You see the banks not following through here, right? You just said we stay off the banks on the longs, still pulling back a little. Not bearish, I don't want to short them. It just wasn't time for a long trigger just yet. QCOM, yeah, if QCOM gets to the 5 minute 200, it is definitely a long. If it can't break much under 91, this hourly 200 play, if it holds right here and comes back over 91, I said try the reversal, right? So if it doesn't quite get there and it holds up and you reverse through 91 and take out that high, you can still play the bounce. If it gets to the 200, we definitely look to play it, right? So you're trailing your short out at 91 or the 5 minute reversal, whichever happens there first. And you could flip it, look for the counter scalp, right? Or if it flushes all the way to 200, then just book the profit and stop and reverse. I wouldn't expect it to go straight through the 200 after 5 bars down and just keep going. It should bounce first and then roll. And Baba just hit 251 on the dot and bounced, so we're hanging by a thread on that trail. Hanging by a thread. TSM. It's getting a play. Looks like it's kind of playing off of AMD stuff here, right? Yeah, I'm doing the same thing. So you want to play the break of that. It's a pretty big gap down already, trying to fail at 78. 2 big gaps in a row, now right in the middle. Not a great location item here. We're kind of in no man's land. So if you want to try it under 78, look for it to continue down towards 77, maybe to the 5 minute 200. You could. It's just a bad location. We're right in the middle of a gap. We're at this prior. Okay, as a market that bounced off the 200 there, that just came back, stopped you out, right? So it should be a break even on the back of that SPY trade. And now if we continue down, we're going to look for the move to the pivot. So if you're doing a short now, right, we didn't short the first time, so let it bounce first. And then if it fails and takes this out, that's your next support level. So if you're trying to short at 321, you're down in the 80s here. I'd probably put my break even in now, protect that in case you get that whip at the 200 where it pokes through and doesn't follow through, because that's enough push that should continue. If it doesn't, just take it off, and if we go back through that bar's high, and try the reversal one more time. Baba blew through 251 on that pullback, so we're done with that thing for now. Could you short Baba the sell setup? Look for a retest. You could. Yeah, you could. I am not going to do that. However, I'm going to stay flat with some nice profits here. Let's see, Disney, what are you looking at here? Disney, 115. It's not that stretched out. You know, you're trying to do a down and through there. If the market gets to this pivot and Disney's still holding 115 and can't break down, I suppose you could try the reversal play there. Like a little bit more stretch, right? You want to be a little bit if you're going to go against 8 and 20, you want to be far enough away that it makes sense to try it. That's close. All right, market giving us the follow through. Guys, nice little push right there. Good little drop. So short at 321. Tighten up the trail to 75. If we can get right to that pivot, be a nice target. And then if we can sneak by it, 321 on the number. See that pivot from yesterday was right there at 320.78. I'd start looking for that as support. So cheat the stop down a little bit to lock some in. Nice target here in front of this pivot, and then see if we can get the push at 321. QCOM should bring us down to that 5-minute 200 if the market keeps pushing, and then we'll get our stop and reverse off of that. You want to do Micron on a reversal? Let's see what you got. Micron on a reversal. If it can get to 50. Yeah, I don't know if I mean you want to try it right now. It's up to you. You're going to do the hourly 200 thing there. Yeah, if the market does not break the pivot and starts to rally, and you want to try an hourly 200 play on Micron reversal play, because remember, guys, after you get away from the 8 and 20, the market cycle says it has to rally back up for the next sell. So if you're looking for the short, it's going to be after the next rally. You don't short on a 5-bar drop away from the MAs. Like you don't short the market now. The short was here on the break of the 200 and 322. That's the short. This is support. So now you're going to get the bounce back, right? The mistake is chasing the short. This is already away from the 8 and 20. It's too late. You missed it. Now you got to wait it out, either GBI or bounce back up and the next sell. In the meantime, if you want to do some counter stuff, by all means, take advantage of it. So why I keep looking at QCOM to trail that short out, looking for the flip play, right? So QCOM short up there, bounce back to 50, stop out, at 50 break even, then another 2-minute sell re-triggers, and now you're trailing. You're hoping it gets all the way to the 200 for a full stop and reverse play. If not, book profits on the break of the 2-minute 8 or a 5-minute bar, and depending on where that 8 is, maybe or maybe not go long at that point. But if we can get all the way to here, we're definitely going to try it. Just a stop and reverse. Take profits, and I should call it take profits in reverse, but you stop out of the current position and flip. So this will be book the short and go long off the 200. If not, we'll just book the short, and I don't necessarily want to say go long until I see how close we are to that 8 MA. Uh, 10 a.m. reaction time. Yeah, it doesn't always lead to that. Like every 30 minutes or so, you can look for markets to kind of stop and take a breath. Sometimes you get outright reversals. Sometimes you just get little pauses that refresh. And it's not always right on the dot at 10. Sometimes it's 10:05, 10:10. But yeah, about every 30, 35 minutes, you want to be aware of, okay, we just ran straight in one direction for this long. Markets tend to put the brakes on after 25, 30 minutes of one directional moves. Does not, like the term reversal time, you got to be careful, does not mean trend reversal. It could simply mean current price reversing. So we've been dropping, the reversal is a little bit of a rally. Could be into the next sell setup, could be change of direction for the trend. Too many times I see traders just think it means at 10 o'clock you just flip everything. Not always true. Sometimes it leads to trend change. Sometimes it just leads to a little momentary bounce. And the other thing to keep in mind is data. Data. Econ reports. That's the other thing that tends to come out at 10 o'clock, right? You want to know whenever there's data. So if you have big economic reports coming out, we want to be aware of those, right? So do we think that the consumer confidence number is going to be a big deal at 10 o'clock? I don't really think it is, right? But it's a report at 10. Now tomorrow we get home sales at 10 o'clock. There's a Fed announcement about the funds rate tomorrow afternoon. The Fed makes a statement, right? Those are significant events. You want to be aware of those. Okay, the consumer confidence number, we got a minute to go. It'll come out. We'll see. I mean, if the market jumps off that, okay, then it was a big deal today. If it doesn't, we don't have to worry about it. What I like to know when the data is coming is so that if I'm in positions, I'm prepared for sudden movements. Or I don't get caught off guard of it going against me off the number. If I'm not in a position and I have data coming out at 10, I don't get into one right before the number. I don't try to guess the momentum off of it because it's too hard to place the stop properly. Right, so if you're flat going into 10 o'clock, just stay flat. Let the data come out. If you have something going and you're profitable, tighten up your trails a little bit. All right, guys, so this little 5-minute reversal bar here, if we clip this on QCOM, book the short profit, 8's far enough away you could try the long. Same with your market short there, right? We got down in front of the pivot. We said bring the stop down. So that short got trailed out, but was not a good flip long up at the moment. It was just a good trail out on the short. Right? Because if you chase, and it's what I want you to understand here, you don't chase shorts like you see that and say, oh, big igniting bar. Remember Oliver said elephant bars, short those, but not away from the location. Right? Yesterday you talked about the narrow and wide states. This was narrow, now it's wide down here. So yes, it's a big bar, but it's near support away from the MAs. That's the trap that people fall into. They start trying to short down there, and they get whipped, and then they say it doesn't work. It's my favorite thing is watching traders do it completely wrong and then say it doesn't work. And then I'm like, I do it every day, and it works really well. But you have to thoroughly understand it. Once you get it and do it right, it works a lot. Does it work every time? No, nothing was 100%, but more times than not, it works enough that you can get yourself in position to be risk-free, right? And that's the way I look at it. If it's a risk-free event, side is zero, and your upside is you don't know yet. It's unlimited potential. And that's what we have to say, right? A stock technically can go forever, but let's say your upside is potentially making 2 to 3 times your risk amount, and your downside is zero. Pretty hard to screw that up, right? So every time I get it wrong, it's zero, and every time I get it right, it's maybe 1, 2, or 3 times what I risked. It's pretty good. So getting yourself in position where trades trigger and then you comfortably can get your break even in, so it's zeroing out the risk, right? That's what we mean by controlling the downside. Well, how do you control it? You minimize it, right? You can't eliminate it. You can't ever take an initial trade without risk. It's impossible to do. So the goal is, how do I mitigate that risk as quickly as possible? How do I minimize or eliminate it after I put it on and still have a chance for the trade to work? That's the key. There we go. Look at that. Market's still pushing up. Imagine if you shorted that low right there. So I try to short the low. Why did it rally? It's under the 20. I'm supposed to short under the 20, but not away from the 20. That's what happens to you, right? I'm supposed to short QCOM because it's under the 20, but now it's away from the 20. You wouldn't short down here. You'd have to wait for a bounce and then a potential short. So in the meantime, when you learn market cycle, you can play the other side of those trades, right? Or not, or just take the profit, right? You don't have to do the reverse. You can simply take the profit and not worry about it. But when you become astute at this, you're going to want to take every possible part of the cycle you can take, right? It's like, well, why would I skip that, right? If this thing is about to rally back, why would I not want to play that piece? You know, and that's what traders, as you get better, you start doing it. New traders think they can play both sides, and they tend to make the mistakes on the counter because it's a little tougher to get that right. And that's why I've always stressed is just stay in the directional trades first. You just have to make sure you're at locations when you do it. Because if you, there we go, boys and girls. That's a nice little reversal pop. There we go. See what? That's why when you know how to do it, you want to do both sides. When you take trades against the MAs, you have less of a margin of error, right? So you have to be more precise with your timing, more precise with your entry, more precise with your stop. So it is harder to get it right. It's easier to do the trade in the direction. It's just the mistake I see is people do it at the wrong location, right? And then you have to have the patience to wait it out for the next round, the next cycle back before you do the next directional trade. And when you get impatient, you start chasing it and you do it at the wrong time, or you see it late, right? You see 5 bars down, you go, wow, look at all that red. This thing's really weak and it's under the 20. So I'm going to short it. Right? Like Micron here was just down to 30. I think Thiago was going to do it off the 200 there, right? And I said, yeah, you could give that a shot. So he recognized, hey, I'm down 5 bars already into support on the hourly. Yeah, I'm under the 20, but I'm away from it. So why would I want to short it right this second? You wouldn't. But sometimes you see it late and you're like, oh, all the red, I see it. He said big red bars under the 20 is a short. No, didn't say that. At or near the 20 is a short. An igniting big single red bar could be a trigger. 5 bars down away from the 8 and 20, that's not the time to short. That's time to book profits on your short, right? Because if you short that bar, then this happens. So let it bounce first, then look for the next sell, right? Market cycle away from the 8 and 20 should come back up a little. Then you can look for the next sell setup. But when you short right at the moment it's furthest away, you usually get bit on the reversal. Then you'll cover go long at this point and it'll roll and you'll be chasing your tail all day. Constantly on the wrong side. QCOM, it's going to have to get through the 8, Peter. I mean, the bounce is to the 8 MA where it should go. So now it's a question of, do we get the higher low and it rallies to the 20, or does it stuff it and we get a retest? So your break even should be in, right? Look, if you trade over that little narrow bar, you have plenty of room to go back up towards 91, which we did, and 8 MA catches up. So now you're on a break even on your counter. And if the little 2-minute 8 catches a higher low and we rally, we look for the 5-minute 20. If it hits this and rolls back against us, you'd kill a counter. And I probably wouldn't go short because we have a lot of support right underneath us and there's not that far to go. Market's still pushing the upside. That looks pretty nice. So your short idea there, we said covered at 75. Good thing. Reversal off that pivot area is bouncing pretty well. Right, so again, is this an ideal short? Nope. Way away from the MAs, near support, big wide bar. That's more exhausting than igniting, right? You want the big wide bar to come out of the narrow state, as he said yesterday. I was trying to use the follow-up talk to what he was giving you guys yesterday, if you're visiting from the open house again. You know, the hard thing about trading is it's not a science where you can say every time this happens it works, right? Where if you learn other things that are math based or science based, once you learn them, they don't change, right? I had a coaching student this morning was a little frustrated with some stuff, um, and I understand the frustration because I've been there myself. But she's a physical therapist, right? And she said, "Man, it's just when I think I have it, it does the opposite, right?" And my comment back to her was, "It is going to be frustrating for you when you learn it. Is not the same every time, right? Your expectation has to be flexible. This may not work. It should, but it might not. Where when you learn anatomy, you don't go see a patient one day and say, "Hey, your arm is not bending the way it's supposed to," right? The bicep muscle is always going to flex your arm, and the tricep muscle is always going to extend your arm. So once you learn how the muscle works and where it attaches on the body, you can start studying it and getting pretty good at fixing it because you know what it's going to do. It's never going to be the opposite. You're never going to walk in one day and the bicep muscle's extending the arm. That never happens, ever. But some days you're doing a trade and it follows through, and some days it doesn't. And some days the buy setup off the 20 bounces and works, and some days it fails. And it's like, well, what's going on? So you have to know what should happen, and then you have to recognize the sign that it's not happening so that you can either get out or play in the other direction. And now here's the other kicker. It's not always a good idea to play the failure. Sometimes the failure is just that, and you step aside and say, I don't know what's going on, but I'm out. Other times the failure is an entry. Like, listen, this is such a great setup that if it fails, it's going to go big in the other direction, and we're going to flip it. And you have to know the difference, right? And there is no consistent thing that says every time this happens, do this. It doesn't work like that. Trading is definitely a part art form, and it requires a lot of experience to recognize all the scenarios of what might happen, what could happen, what should happen. Because all we're playing is probabilities. We're not playing absolutes. And that's what's frustrating about trading for people. They think, well, if I study the manual and I memorize the patterns, I got it. No, you don't. You don't have it. Not even a little bit. You have enough to start your learning. You have enough to sit your butt in the chair and start pushing some buttons, but you've got to build the experience, knowledge through that, through experience. I can't teach you experience. I can't give you your own knowledge base. Right? I can teach you from mine, and I can tell you what's probably going to happen most of the time, and you'll be like, wow, that's pretty cool. Most of the time he gets these things right. It only comes from having gotten them wrong in the past and being frustrated by it, not understanding. And the more you do it, the more you learn to roll with it. What should happen is not always what's going to happen. Knowing what to do in either scenario, you can deal with it. So you can recognize very quick, this is not working, I'm out. This is not working, I'm reversing. This is working, I'm going to ride it. And when things become so ingrained in your experience that you know exactly what should happen, the first sign that it doesn't, you'll be out. Your ability to cut losses gets better if you allow yourself to, right, with your experience. Sometimes you're so stubborn you just won't let go and you want to be right so bad you just keep repeating the mistake. But over time you see enough trades that you learn, like, okay, when this happens, that's the failure of the pattern. When this happens, that's when it tends to not follow through. Like, I've seen this, I've lost on this so many times. You recognize the signs early and you can get out before it even falls apart. Right? Traders, I know you guys can't see the comments, but they will tell you that I have an uncanny ability to say, guys, I don't like the way it's behaving. Let's just get out. And within a minute or two, it'll fall apart. Right? And like, it's like you have ESP or something. Like, how do you know? It's like, it's not that I knew, it's that it wasn't doing what it should do. Like, when they work, they have a certain way about them. When they follow through, there's a certain way that they look and a certain behavior of price. And you just start to feel like, yep, that's how this one's going to work big. Like yesterday, what was it? AEP? EAP? I don't even know what it was. I never traded the damn thing before. But whatever it was, what was it? AEP? Right, this thing. So let me ask you guys this. How would you possibly know at this moment, as it's dropping, and it drops again, how would you know that, hey, at 80, if it can't follow through to the downside, it's a good reversal? How would you know that? And then when it does it, it's like, dude, how the hell did he know that? How did he do that? Well, a couple things. One, you've taken a trade that looks like this before at 82, and you held on for dear life, and when you got crushed and stopped out for a few $1,000 loss and then watched it reverse, you're like, son of a. And then go all the way back past 82, you start thinking, man, I should have just held on. I would have got out of that thing. So then you start holding on, and then the next time you do it, it hits the 8 and it goes into another sell for another move down. And then you realize, like, all right, holding on is not a good idea either. So you lose all the different ways you can lose, and then you start remembering that and say, yep, I used to do it here, and then right about here is where it would reverse on me. So then that's your new expectation of reversal. And then you learn about whole numbers, and you learn about the decades, right? 80 is more important than 81. It's a decade number, 80, 90, 100, etc. Century marks are bigger than decade marks, so they're more important. Just all these things that you learn. And then you can start doing plays like that. And you think about it ahead of time. You're looking at it here saying, guys, if that makes it to 80 and then fails at 80, that's going to be our home run trade. Boom. That was our home run trade. But it's not because it's in the manual. There's no picture of that as a home run trade. There's discussions about far from the 20 and extensions from a base and narrow bar reversals, and there's all the concepts. But knowing how to pick 80, that's from doing it for a while and getting it wrong more than you got it right in the beginning. And then you start to get a feel for it. That's the experiential database. So it just takes a little time. There's no way to rush that. Is that going to work every time? No. There's going to be a trade that's going to look like this. It's going to bounce into the 8 and roll over and go lower, or just dead bounce sideways. And you're going to go, yeah, but that one time he did this one, he had a huge bounce. They're not always going to do it. So then you'll start to learn and recognize what it looks like when it doesn't do it, and you'll be able to get out of it. Say, all right, that one's not working, I'm out. It won't burn you that often. But how else would you get there? Got to go through some reps. Oliver said the same thing I did at the same time. Vincent, oh, just now? That's funny. Having the same conversation in a different room. I mean, because it should be pretty similar, right? I mean, we trade a little differently, but conceptually, it should be the same. I mean, I learned it all years ago. He wrote the manual for IFT. The manual is what we teach, right? So it should be. He might just have a different way of phrasing things or use different stories or different examples to try to get you to see something. But in the end, conceptually, it's the same thing. He's never going to go short 5 bars away from a 20. Neither am I. He's never going to go long 5 bars above the 20. Neither am I. Right? He might play igniting bars a little different. We'll both use igniting bars as signals. He might be a little more aggressive in how he gets in and how he puts the initial stop and then adds. And I'm a little more conservative about, well, I don't want to chase a big bar with a high risk amount. Let's wait for the give back or let's wait for the ribby. But still, conceptually, it's the same thing. He said if the trade's going to go, it should just go and not mess around. Yeah, guys, that concept is so true to this day. I can tell you, where is it? I'll look for it here. He's been saying that for over 25 years, and that is always held true. Now there are moments where things come out of a base, and you can say, well, that didn't go right away at base, but you're not supposed to be in the trade initially while it's basing, right? You're supposed to play breakouts or breakdowns. So you're not supposed to be sitting in a trade waiting for it to go, right? You're supposed to play momentum. Now, if you're in a trade that triggered and traveled in your direction and then starts the base while you're profitable, fine, let it base. You don't get out because it's basing, but you don't jump into something that is basing, right? Why would you get in something that's not moving? But yeah, as far as the trade just should go, I got to try to find it in the book that he wrote 20 years ago. It's in that very book. 20 years ago, he said the same thing. I'll see if I can find it later as we're looking around stuff here. That's funny that we were both talking about that at the same time. Spies rally all the way back up, guys. If it gets to prior day's close, it won't be a surprise. And then I think it stalls out. I don't think it's going to rally all the way up here, break out, and keep going initially, right? Why? Because it's 4 or 5 bars up. So just like on the way down, when it hit the pivot, it stopped. On the way back up here, I expect it to stop as well. So again, if you've been watching it rally and rally and rally, you suddenly get the urge like, ooh, I think now's a good time to go long. You're way late. The long was back here through 322, right? Once this big red bar failed to produce follow through, and I said put your stop trail at 75, if you were going to do long, it would have been through 322 and taken out that red bar, not way up here. You're way late. I played a breakdown on Starbucks. Let's see. Would I play a breakdown on Starbucks? No, there's not enough room. I don't think you have that far to fall. Just to get 25 cents here, it's a 1-to-1 trade. Not worth it. You know, if the market keeps rallying, it's going to be hard for Starbucks to break down. if we get all the way up to prior day's close and up to Haas, right, the 50-minute 200, if we get there, we look to fade this little SPY move. If we fail right at 323 on a whole number, yeah, we could do it there too. If we don't quite, I'd like to go through it, pop prior day's close, and then fail back down. But if we just get to poke through at 323, that'd be okay. So I wouldn't be chasing any longs at the moment. I'd be holding off. So on your Starbucks thing, if the market can roll over and you want to try that, I just think there's limited downside to it. 25, 30 cents down. Going to have about a 25, 30 cent stop. I don't think it's worth my effort for a 1-to-1. If it was wide open underneath and there was no support for a while, then I'd probably feel better about it. Chance for a nice big trade, but just to get a 1-to-1. How long do I wait for follow through if it plays again? I do it within a bar. I don't wait more than one bar. I know yesterday you talked about one bar versus two bar. You should have followed through in that first bar. If not, then why did you enter, right? You got to think of it this way. You entered for a reason, right? You expected movement in a direction at the time you hit the button. You didn't buy it and say, well, maybe 20 minutes from now it'll go higher. At least that's not what you're supposed to do, right? So your expectation is this thing's going to move now. And if it isn't, then why am I getting in? So one bar, that's all I give it. Sometimes less than that. Well, you can see it pausing here right under 323, kind of hesitating. We didn't really tick it. We got the 96. I like to see, I like when it tests and fails. So again, I'm just not chasing longs up there. See the market slowing down a bit. I think starting to consolidate a bit. So 10:30 upon us. That would be the next time to look for the market to, quote, react or reverse. I don't think upside has very much potential here. Jammed up against Haas and a whole number. So limited upside left. 8MA starting to hook. So now on the downside, this is going to be support as it starts to come in. Bank's giving up a little bit here. I don't have a great entry at the moment. I think the next few minutes just going to kind of sit tight. Let 10:30 get here and see if we come down for a sell setup and hit the 8 and bounce, then we're getting no follow through on that, and it's going to start tightening up even more. So this sell really needs to break the 8 and go lower, or we need to hold. do a catch on this 20, bounce around, and then take out yesterday's pivot high before we get any kind of real motion. All right, guys. Here, remember I told you I was going to read you this. This is from Oliver's book. The thing I was talking about earlier. Vincent said he was mentioning at the same time I was. That's actually hilarious. That we were both talking about the same thing at the same time in different places. That's he's going to love that when I tell him that. Like we were at the same thought process at the same moment. That's pretty cool. But this is he wrote this book, Tools and Tactics, 20 years ago, right? 20 plus years ago. All right, he says that 85% of the success is knowing how to enter properly. Okay? By entering a stock incorrectly, you can actually turn a good trade into a losing trade incorrectly, right? So entry serves as the foundation for short-term trading. Enter it properly, you are likely to be in profitable territory within minutes. Enter sloppily, and the trade is likely to go against you almost immediately. So think about that. If you do it right, it shouldn't take long to be in profitable territory. If you do it wrong, you're probably losing the second you hit the button. That hasn't changed in 20 years since he wrote it. So why would I be sitting in something for 25 minutes waiting to see if I'm going to get it right? And if I hit the button, it suddenly goes against me, that's a really bad sign. That means I didn't do something correctly. So when I have full losses, it's generally that moment where, wow, I hit a buy and it just fell apart the next bar, right? Those are the ones that I usually lose on. Doesn't happen that often, but when I lose full, that means I hit the button and the whole thing fell apart as soon as I entered. Just boom, blew right past my stop. And in that instance, then I know I'm wrong and I'm glad that I took the loss. But if you enter correctly, it should start going your way. Notice it didn't say it should reach target in minutes. It just says you should be in profitable territory within minutes. Well, once I'm in profitable territory, I'm starting to pair off or mitigate my stop, which is eliminating my risk, which is controlling the downside, which is controlling losses, which is what everyone tells you you're supposed to do, but then doesn't tell you how to do it, right? So you got to make sure you control those losses. Like every educational firm out there wants to pound that message because they'll sound stupid if they don't, right? No educational firm, no trading guru, no coach can go out there and say, yeah, don't worry about losses. Just don't worry about it. Let them get as big as they have to be. We just got to deal with it, right? Like they can never say that. So they have to say, guys, we're not doing Starbucks. It's just the last thing somebody asked me about. Let me change this. You don't think we're trading Starbucks. We're not trading it. But we did say 323 on a poke through for a short would be a good trade. So there's your little three. Remember I said I want it to go up and fail? So it pokes through 323 and then fails, and then that's your short off the whole number. That's a good trade. And you should be break even on that. So look, guys, perfect example. How fast did that work, right? When we were back here even, I said, I really want to see it break 323 and fail. And that's the short off the market. How long did that trade take to be right? Broke above, failed, boom, profitable. Instantly, you were right. And now you're up 40 cents a profit. I mean, when you do these things correctly, you should be rewarded pretty quick. And if you're not, well, I don't know. Maybe we're not ready. Maybe we're early in our entry or something. Look at that. 50 cents a profit? Dude, come on now. 50 cents that quickly? Poke through was 8, so you could have played 10, 20-cent stop. You're up 50. That in the same bar you entered on, that's doing it correctly. So why traders insist on getting in things and then holding on for dear life? Hey, your Starbucks broke down. That play worked out pretty good for you. I didn't want to do it, but it worked out all right. There you go. Right to the hourly 200. I would book that profit right now. In fact, I'd look for the bounce off hourly 200 if I were you. But I would definitely book that profit. That's a great drop, quick, fast. So that one worked. That's how it should work. Look at that. I didn't want to do this one. And I said, if you're going to do it, you want the market to turn red. The minute the market turned red, that broke down. And look at that follow through. That's fantastic. So how long did it take to find out he was right? Within the first 30 seconds of the trigger? Right to target, hourly support, daily support for that bounce. Very nice job. Very nice job. Facebook just mirroring the market here. You see the patterns are almost identical. And that's a way to tell if your stock is on its own or if it's in tune with the market, right? If you overlap Facebook and the spies, I mean, that's almost an identical pattern. So it's just trading with the market. There's nothing special about it today. On that SPY short, be nice if we get through. Remember that 8 hooking is potential support. If we can break this, 322 is the target. If not, I would go 75 on the trail, right? That'll put you back over the 2-minute bar, back over the 2-minute 8, and that would be a pretty good reversal here off the little 2-minute chart. So I'd say bring the stop down to 75 and see if we can fight off this hooked 8, and we'll go for 322 for the big SPY short there. Hmm. Okay, we had that attempted bounce right there, right? We said stop 75, it got stuffed. So now that's 63. If you want to cheat it again, cheat it down to 65, right? Because we just attempted a bounce and we kind of failed on it. If you want a little bit tighter protection, a little more profit lock, go to 65. And see if this thing can give it up down to 322. I'm going to go to 50, right? Technical stop is there. I'm just profit trailing now. I'm 50 cents off that. That's a big trade. Lock that in. Lock it down, Danny. Lock it down. As you see how this Starbucks, it hit that 200, right? And I said, if I were you, I would look to cover that and take it long. Now, I tried it initially when it did that, and 2 minutes later, it hadn't bounced yet. So I got out of it. And then another 2 minutes, it's holding there. So now it's like, all right, would I get back in? Right? Because it should have done this and it should have bounced hard. And it didn't. So even though I tried it there, I'm already out. That's, to me, that's a long time to wait. Now, on a 5 minute chart, you're not even one bar done, right? But you wouldn't have taken it on a 5 minute chart yet because you wouldn't buy that bar. You'd be waiting for this bar to finish. So because I took an early aggressive entry right on that 200 off that 2 minute, and it did bounce initially, when it came back down here, so that's it, I'm done. So I'm already out of that trade. It's not a loss. You know, it's a small gain. I just call it break even. You know, anything less than 50, $100 for me is not going to be a big deal. All right, so it's more of a break even trade than anything. Um, but that's how quickly I will say it's not working. Where the SPY short, right? Once it got a break of that whole number, and I said, guys, look, if it does this, that's the trade we want. That was profitable within seconds, and had a very nice drop. You know, the home run would have been 322, but we get down to here, tighten up stop. So now we're booked out of that. You know, when you're ready to go over here and short Amazon at $3,000 a share, you know, we can get ready to do that trade later. That's a joke for all you visitors. So there's probably some traders like, wow, man, he's doing Amazon. No, we're not doing Amazon. I don't even want to mess with Tesla anymore. It's a little pricey. A little pricey now. And the only reason I'm showing you that Starbucks is it may bounce here, right? It looks like it's finally coming around, but you know, the way I intended the trade to work, it did not, and it did not do it quick enough, so I exited. So now let's say it starts working. You can't get mad at those events, and you can't get upset with those trades, and you can't chase those trades, and you just got to leave them alone. Be like, all right, this is not my trade. It's not going to work. that you want me to do a lesson on. If not, I'll just do whatever I was going to do yesterday. A couple ideas, but if there's anything, pivot breaks. Okay, pivot breaks. Pivot breaks are slightly different than bar breaks, right? One second, guys. 1 second. All right, so when we have a bar versus a pivot break, bar breaks are like, you can think of them as like glass, right? So the top and the bottom of a bar, even if there's a wick on it, a break is literally like if there's a plate of glass on the top, okay? So even if there's a wick, right? The minute it is ticked above or below, so imagine that's a glass plate sitting on top of that bar, right? It's balancing, it's holding it up, okay? And then the next bar starts to form, and it hits it right there, crack, broken, okay? Boom, that's it. Now, what if it comes back down and closes like this? Well, that plate's still broken. It's just now there's a new plate, right? It got replaced with this one. So this plate broke, and now it's up here. You had to replace it and put a new one on. But that one was still broken. Okay? Now with a pivot break, it's more like that's a rubber band. It's not a glass rod. Okay? So let's say that now this is a situation where you have a pivot right here. So we got to confirm that it's a pivot. Hold on. So we got to let's make this officially a pivot. There you go. Right now it's a pivot. So this is now a rubber band. So on this bar's high would be a glass rod, glass plate. This pivot high would be a rubber band. Okay? All right. From here, the next time there's an approach, that would not be a break. Okay? This bar, when that high was taken out, the minute it went through that high, whoops, break. Then when this bar went through this high, break. This bar trying to go through a pivot, that's not a break yet. Okay. This bar is not a break. This bar is not a break. It's a rubber band, not a glass rod. So this can be stretched. Right? This could be stretched out a little bit. There we go. It's just kind of stretching it, right? Still hasn't broken. That pivot. So the break of this bar's high is on the way down. Is that a break of this pivot? According to what I just said. Yes, Cesar, what I just said is teaching you how to do this, so I like that answer. He's like, well, according to what you just said, it is, or is not. Yes, what I just said was the lesson on pivot breaks, and this is the test question. Is that a break at the pivot? No, I just covered this 5 minutes ago. That is not a break of that pivot. No, it is not. Now is it a break of the pivot? Yes, now it's a break because you have follow through. You cannot have a pivot is not the same as just a single bar. 1-2 ticks through a prior low is not a break. And this is why so many traders get burned trying to play pivot breaks instead of playing the failure of them to break. Like I'd play this as a long all day. Right? If this red bar did this and then the very next bar does this, I'm going long right now because everybody else just went short and they're about to get crushed. And I'll take that as a failure, and that's a long. But that's not a break. You need 2 bars. One to close it, one to confirm it. A bar by bar break is just that. The second it goes over the higher low, you say it's broken. It may not work, it may fail, but that's how you have to read it. That's how you have to play it. So now here's the other concept that you've got to get, you just got to get in tune with reading it the same way every time for yourself so that you're consistent with your action. The other side of this mistake that's made is people are waiting for this bar to close, right? They're waiting for this to close, saying, well, it didn't break because it's not closed. at some point, when you're looking at reading candles, right? If something gets really wide, then you count it as 2 bars, right? You count it as 2 bars when you're doing normal bar counts, right? So um, if we saw this on the way up and we were counting, we'd say 1, 2, 3, right? And then if the next bar did like this, we wouldn't just say 4, right? We'd say 1, 2, 3, 4, 5. We give that a 2-bar count. Okay. So when a bar is going through a pivot and still forming, okay, if it starts to gain momentum and gets wide, and the question will be, well, what's wide? You got to look at the chart. At some point, you've got to make that call yourself. This is the art side of trading. You've got to decide basically when is enough enough, right? That's not enough. A couple ticks, it's not like a bar by bar. Remember, it's a rubber band. At what point does this rubber band snap? Okay, so if this rubber band gets like that, okay, and this green bar is still forming, hold on here. Oops, not what I want. Okay, I don't want you. Why is it doing that in these weird colors? I don't want you to look at that and say, well, it didn't break the pivot yet. Still 1 bar. I mean, how far do you want to stretch this thing before it snaps? Right? So it's a call that you've got to make based on the chart. Right? And here's how you do it. Okay? Here's how you do it. Before it even gets close to being at the pivot, okay, before it's even close to being there, you should be thinking, okay, how much of a break based on how the bars are trading right now, based on what I see right now. Here's that red bar. You should already be identified, okay, that's the pivot. Here's the most recent trading activity around this pivot area. Before I get the next 1 or 2 or 3 bars down, where on this chart would you consider that pivot to be broken on a single bar move? Is it this much under, this much, this much, this much? Like where, where would you want this to be? So like, say when? There? Is it there? Is it there? I mean, if you're here, then damn, dude, it's like 3 bars. Like, what are you waiting for? No, Caesar, that's what I'm saying. You are trying to identify if a single bar were going through this low, right? Remember, it's not going to be a bar by bar break. It's a pivot now. So if whatever bar is forming, I don't care if it's the first one, the second one, the third, it doesn't matter. If the bar breaking this low is still open at this point, is that a break? If it's still open at this point, is that a break? If it's still open at this point, like when are you going to say enough is enough? The rubber band has snapped. I got to be out or I got to call it a break. Like when do you want to do it? And there's no wrong. The only wrong answer is 1 cent. That's not a break. That answer is incorrect. Okay, so every chart's going to look a little different, And you're going to have to gauge it. That's like the same question as, well, what's an igniting bar? How big does that have to be? I got to see the chart. All right, so what if, I'll give you some reference points here. What if this is the 20 MA right here? What if that's the 20? Well, it's certainly got to be somewhere before we hit that 20. Guys, hold on one second.